Hi, I'm Michael Gable, Managing Director at Fairmont Equities. We've had a couple of interesting bits of economic news come out of the US recently, and it gives us an idea as to whether we are going to get interest rate cuts this year and whether the share market could continue to rally higher or not. So let's have a look at what those bits of information are. Of course, any advice is general only. This is the US core personal consumption expenditure. It's the US Federal Reserve's preferred measure of inflation when they go about setting interest rates. As I've been saying for a while now, let's not get too caught up in the monthly figures, but the fact is that the trend is heading lower, and this confirms it. The latest numbers came out on Friday to show that the PCE was up only 2.9% for the year, which was less than the 3% expected. So it's still heading lower, and in some respects it shows that the US has already hit its inflation targets. So this means that interest rates in the US of over 5% are too restrictive and they will need to head lower. We've already seen bond yields fall over the past several weeks, and as I noted last year, they go up and down quite sharply, and they're now falling just as quickly as they went up. There is no higher for longer, which is what everyone seemed to be saying last year. Well, what about the share market? Well, low rates are good for markets, but does that mean that that we're going to have a recession because interest rates are going to head lower? Well, have a look at the GDP growth in the US. Now, this is a chart going back 25 years. The recent figures out of the US show growth of 3.3%, which is massive. It's bigger than the 2% that was expected. So there is no recession in the US. We can see on this chart the low points where there were previous recessions, and basically where we are now is just back in the average range. So the economy is growing and we have rates heading lower. So falling interest rates and positive GDP growth is very positive for stocks. There is no other way to look at it. So therefore, 2024 is shaping up to be a very good year for equities. If you're looking for more ideas, go to fairmontequities.com and sign up to our free trial. Here you will receive our trading guide on how we buy and sell shares, and you'll also get 8 weeks of our research delivered to your inbox. And if you qualify for our portfolio management service, where you have more than $500,000 to invest, give me a call and I'll explain how I can personally help you.